Okay, like what we reported earlier, well, of course, there seems to be some level of growth here from last year. We still recorded slower credit card business, at least in the latter half of 2021. This is a number of customers make that shift to alternative modes of digital products. Is the credit card business under threat due to the growth of other digital products here?
I don't think so, Jess. I think what's happening really is as consumers are given more options, more convenient ways to pay, the pie, if I can call it that, the share of digital transactions or cashless transactions is increasing. But there continues to be growth in credit card transactions. In fact, just looking at the 2022 numbers, first quarter industry is up by about 11%. Among our own customers in RCBC, in the first 5 months of the year, transactions are up by about 45% compared to same period last year. So not necessarily a threat, but consumers are expected to shift towards payment forms that give them an easy, convenient, and secure way to pay, as well as really driven by their need.
Arniel, can you nuance this growth? You already mentioned transactions, but generally in terms of credit card usage, is this, like you mentioned, the people that already had credit cards that were keeping the spending and then revenge spending na now? Is this, new people finally getting credit cards, being more financially included, perhaps? Or are these people that are shifting from, cash payments, digital payments, towards having more credit payments?
Sure, Danny. I would say a lot of it is really coming from existing credit card holders already who've been there for the long time as part of the pandemic and are now more empowered to be consuming or spending because of the ease in restrictions and the improving economic outlook. The industry has booked and issued cards, but relatively speaking, when we talk about overall number of cards in the market, that's relatively flat, maybe about 1 to 2% growth year on year. So it's really coming from customers who continue to thrive under the existing situation. As you probably know, over the last 2 years as well, there's a segment of the market that's found it difficult to continue paying for their credit card debt. So by now, a lot of those customers would have either been managed out of the bank's portfolios. So we're really talking about consumers who can continue to pay and who have greater demand now that the economy is opening up.
Arniel, can we press you on that? What percentage of people have had trouble paying their credit card bills? And has that improved, gotten down because people hopefully are back to work, have employment already? Is that a very agile, position? That people pay right away once they do have income, and then people get, again, when they lose income, have trouble to pay?
Yeah. In 2020 and most likely first half of 2021, banks have had to go through a lot of programs, Danny, to help customers. So there's really a segment of the market, especially those from vulnerable sectors who've either lost their income, lost their jobs, or had their incomes reduced, who found it difficult to pay. And the industry generally has been very supportive. In addition to the relief programs that the government has mandated from the banks. So we've helped a lot of the customers restructure their obligations. When I look at the data, primarily non-performing loans within the credit cards businesses in the industry, this has already gone down. And what that means is customers now find it easier to pay for their credit card obligations. At the same time, customers who had difficulty before a lot of them would now have found ways to pay for their obligations, working out some form of relief programs and arrangements with their banks. So generally, as the economy improves, what we find, as we do in our own business, is that the risk outlook also improves. And that is why we have increasing confidence to continue growing the number of credit card issuances, particularly this year, and continuing supporting our own credit card customers in their spending needs.
Arniel, it's zero in an RCBC Bankard this time. What's your growth trajectory for the year? And do you see demand at least increasing for the rest of 2022? And how is a BSP's decision to actually keep ceiling on credit card transactions going to impact your margins?
And raising rates.
Exactly, that too.
Yeah. We just first is really in terms of credit card issuances. We expect to see some growth. Again, that's a lot driven by improving outlook and our improving risk appetite, particularly for RCBC. So we expect cards issuances to be up by up to 10% year on year. The growth will be faster in terms of transaction volumes, again, given the easing of restrictions. So definitely there's more room for growth this year compared to last year. Now, with respect to the BSP keeping the interest rates capped at the 24% per annum, we're supportive of this, especially as we continue to support consumers with cheaper access to credit at this point. At this point, Jess, most banks would have already done the adjustments in terms of their business models in order for them to keep running the cards businesses for the long term. And in RCBC Bankard, that's precisely what we have done over the last 2 years. A lot of it has to do with making sure our processes and business services are as efficient as possible, accelerating our digital transformation journey within our own customer base in order to make sure we run an efficient business for the lower yields that we're seeing these days. With the rising interest rates, given the recent monetary policy decision, at the moment, we're assessing the impact to our business and we'll make certain adjustments as needed. But generally, we have enough room at the moment within our existing yields to take in that higher cost. And of course, the rates are capped. So we will manage it within the existing portfolio and probably among preferential rates that we offer to existing cards customers.